What's going on, Investomaniacs? Night Rider here, and today we're giving you the Robinhood Snacks stock market update. Mary Meeker's epic internet trends report has victims. Google and Facebook. Stop whatever you're doing, unless that's watching Investomania, in which case, continue on, brother. We've got trends to report, son. Mary Meeker, aka Queen of the Internet, just dropped her 333-slide Internet Trends report. The hugely successful tech investor's annual deck is read across the venture capital community to find the next blank of blank. Hey, we read it for you. It comes down to three key trends. Internet growth worldwide is slowing. The number of World Wide Web users grew just 6% in the past year to 3.8 billion people. That's the slowest growth ever. Online ads are growing in an interesting way. 22% more dollars were spent on online ads, and that growth is rising. But targeted ads, aka the ones that freakishly know you just clicked on a blue shirt or the fleshlight, and then all of a sudden you start seeing all these ads for the blue shirt or the fleshlight. Hey, those things are getting hit by regulation like Europe's GDPR. And Amazon and Twitter are winning ad market share from Google and Facebook. Americans are disturbingly online all the time. Time spent on the internet rose from 5.9 hours per day to 6.3 hours per day this year. 26% of US adults say they are almost consistently online. Constantly. Same thing. The takeaway: this hurts Google and Facebook the hardest. Big tech was already on the defense everywhere. Now, two of its leaders can add internet trends to the list of things they have to fight against. Congress held a hearing yesterday to see if the pair's online advertising dominance was killing news and thereby threatening our democracy. The Federal Trade Commission and Department of Justice just added them to their radars for antitrust worries, aka, are they monopolies that should be regulated and or broken up? Apple is religiously positioning itself as a privacy god compared to Google and Facebook, which I do appreciate, Apple. Thank you for being more responsible with our data. Amazon shuts down Amazon restaurants, and Grubhub shares celebrate with an 8% pop. Apparently, Amazon does fail at some things. The company's restaurant delivery service, uncreatively named Amazon Restaurants, will end on June 24th. The 1-hour meal delivery for Prime members is now over. Now, restaurants gets to join the rarely discussed club of the Amazon unsuccesses. Most notably, the Amazon Fire Phone. It's a smartphone from 2014 to 2015. Rest in peace. Remember that? The 4 cameras, and Jeff Bezos was like, I can't wait till developers get a hold of this. It didn't quite work out that way. Destinations, an attempt to get into the travel bookings game. Hey, that shut down the year it launched. Dash buttons, $5 gadgets you press to auto-order more things like Tide. Hey, but I guess barking at Alexa turned out to just be easier. Plus, every time I give her an order, my girlfriend loves to say at the end, yeah, bish. And now Amazon Restaurants gets to join that list. It was tiny, just 20 cities and 2% of the overall market. 90% of the food delivery market is devoured by 4 companies: Grubhub, Uber Eats, DoorDash, and Postmates. Word that Amazon canceled its delivery plans popped Grubhub shares 8% Tuesday. Shares of the others are either private or complicated by Uber's rideshare majority business. Amazon's not completely out though. Last month, it led a $575 million investment in UK-based deliverer Deliveroo, which just really sounds to me like kangaroo, and like there's some Australian dude who's like, oh, let's call this Deliveroo. The takeaway, Amazon clearly didn't promote restaurants enough. And we found a key example that highlights that: fast food partnerships. Hey, Uber Eats, they deliver for McDonald's. DoorDash delivers for Wendy's. And Grubhub delivers for Taco Bell. Amazon didn't invest in driving growth to its own service, so instead it'll invest in Deliveroo. And they'll do it that way. Hey, hope you guys have a great day.